Bitcoin is at an all-time high. S&P 500 is at an all-time high. Housing is at an all-time high. Is everything at an all-time high? Should we stop investing? Is that the right thing to do? Of course not, man. You know it's not the right thing to do. Let's watch the video and find out why not. Welcome back to the channel, guys. Today we're going to be talking about a great topic of interest, but before that, I got to go over the glass water, the stuff that keeps me hydrated. These are my qualifications, the good morning routine. But besides the jokes, guys, I know I got a lot of cleanup in the back, but let's not worry about that today. Let's talk about the stock market and the Bitcoin price at the moment. Bitcoin has just hit a new all-time high. I'm pretty sure a lot of you guys saw it, and that is awesome. But it also brings a conversation. Is right now the time to invest into Bitcoin, into stocks, because stocks are also at a new all-time high? Is it the time? And guys, I'm here to tell you, it is the time. All right, let's go over a couple of facts here. So guys, a lot of people tell me they're worried because now they're like, oh, should I buy on the top? Even people who are just planning on holding for a very long time. Guys, let's not overcomplicate this. Let's look at the charts. This is a SPDR ETF, okay? It follows the S&P 500. It's followed it for a very long time. Let's look at the price in 2001, all right? Or just before 2001, before the dot-com bubble exploded. What was the price that we were trading at? 147 at the highest, all right? USD a share. But let's look at 2007. What's the price? Wow, it is the exact same price. So that means for a whole decade, you could have not invested and you would have still got it for the exact same price. But wait a second. What about 2007? What about 2013? Very similar price. So that means you could have gone a whole decade and you could have invested at the exact same price that people were buying in pretty much a decade prior. And why is this? Is this the case? Is this something we should be scared of? No, guys. Take a look. The entire portion in this chart has been going up and down because of cycles. Some bubbles exploded, some debt had to be refinanced, some housing market crashes occurred during this period of time. So there's a lot of things that were taking a strain on the market. And because of this, prices fluctuated high and low. But guys, let's not pretend like right here we're not hitting all-time highs. I'm going to explain to you why, if you bought during these periods of time, you would have made money even in that decade. When the 2000 bubble exploded, let's say we were dollar cost averaging, okay? We would have now been taking a loss for almost 6 years. However, that loss that we had for 6 years, if we kept dollar cost averaging, do you know what would have happened? We would have made money. In 2007, all of the gains that were almost 50% off would have been right back to all-time highs. But however, again, another market crash happened. And then what did that give us? More portion to buy the same stock that we kept buying at a discount. Guys, remember, when market crashes happen, it's a discount. If you go to the grocery store and you get your essentials for 50% off, you're happy. Think about the same as stocks. Stocks should not be, especially if you're investing into an index, should not be something that you're trying to make money today, tomorrow, the day after. You should be trying to look at a 5, 10, even 15, even 30-year horizon, because that's when you make your money with stocks. Now, guys, let's take a look at 2007 to 2013. Very similar story. There was the down market, but if you kept buying during this down market, what would happen when you hit all-time highs? You would have made a lot of stocks. Now, let me ask you a question, guys. The person who continuously bought during this decade of no returns versus the person who didn't buy and who just started investing in 2013, who do you think would have made more money? The person who had all those stocks that he was buying at a discount. Because remember, let's just say in 2013, now we're back to all-time highs, that nobody was able to buy the S&P 500 or again the SPDR ETF at 76 USD a share. They would have to be buying at 140. You were able to get the same thing for double. And let's look at 2013 to 2025. Wow. All right. Let's just say we're right at 2015, just starting. All right, closest that we can get to it. $2,008 a share versus today, which is 623. 3x from that position. And again, if you were buying during that entire period where the market was down, you would have came out on top. Because listen, guys, when you're investing into indexes, you're not investing into something that doesn't make sense. You're investing into real quality businesses. And that's why even before Bitcoin, indexes are still the way to go. Even passive indexes, even if you're just buying stocks, I wouldn't recommend it. But however, whatever way you want to buy it, guys, the stock market is based on real returns of real businesses. Even if you think a business is overvalued today, that doesn't mean 5 months from now the price might not be looking better. Now, remember one thing, guys. Buying power in 2013 is very different. Wages still went up during this period of time. People were still making money. Obviously, there were some crashes, especially with the housing crisis. A lot of people lost a lot of money, but a lot of people made a lot of money as well. So, if wages had increased and you were able to buy the same stock for a lot cheaper, would it made sense to do so? Then think about today. Although 623 seems like a high price, if you could think that in 2030 that this price would at least double, do you think that that would be worth it for you? I think in my case, yes. And I honestly do think in my case that this price will fluctuate downwards. I think maybe we could even hit 400 USD. Who knows what we can hit over the next year, right? If tariff threats keep happening, if trades slow down, if all this global network trade that we're building all goes to zero, what's going to happen? If the price is going to come down. Now, I have no worry about that because the same index that I'm currently buying, because it's a good idea, is just going to be cheaper for me to buy. It makes no sense to be worried about it. It just makes sense to understand that ups and downs happen. Take yourself emotionally out of it and just continue to buy. Don't look at the market. Don't look at the price every day. When the price is up, you're going to feel amazing. When the price is down, don't feel sad. Don't do it. Now, guys, let's look at Bitcoin, all right? Bitcoin, obviously, over the last 5 years has exploded. Amazing, right? But, guys, truth being told, let's look at in 2021, the price of Bitcoin was, let's just say, $55,000 in February. The price today is 117,000 USD, right? Guys, it has more than doubled. That's amazing. But in some portions, it's just doubled. Now, the reason why I'm saying this is every 5 to 6 years, S&P 500 doubles as well. Eventually, Bitcoin, if it stabilizes into a good asset, you could see similar returns into it where it grows by 10% a year. But who knows if that happens, right? And there is a big chance that Bitcoin now is going to stick around. But the US dollar is also going to stick around, same as the Canadian dollar. I don't see those going anywhere anytime soon, even if you say they're devalued. Now, if Bitcoin rises, just like gold, just like an economy, that's amazing. It's awesome. But let's bet on things the right way. Let's start properly investing into the S&P 500 and then throw some extra cash over there at Bitcoin, because it never hurts to add more things to your value. Like, again, how many dresses are you going to have? How many shoes are you going to have? A lot of us have more than we'll ever need. Some of us only wear clothes once and then we don't even look at the clothes again. It doesn't make a difference if you waste a little bit of money, even if you lose, but as long as you gained a lesson. But not investing is where the issue is, guys. When people think that I'm not going to do anything because I'm too scared to do anything, my friends, you're just asking for trouble. All right. The worst thing to do. All right. And I'm gonna say this the best way I know how. It's not your fault that you're not rich when you don't know what to do. However, it is your fault when you know what to do and you just choose not to do it. So, guys, I hope you guys were able to take something from this video. Just wanted to make a quick video about it. Let me know if you guys like these face cams instead of me playing Call of Duty. I'm not that good at it, but, I'm just trying to make something entertaining. But yeah, trying to get better at editing, guys. If you guys have any tips, please let me know. And yeah, we'll talk to you soon. Bye-bye.